Hi everyone. I wanted to give you a review of the basic thing of the accounting equation, which after everything you've learned in the semester, looking back at it, things may make much more sense when it comes down to the basics. The simplest thing being, what is an account? In very simple conversational English, you should know that an account just keeps an account keeps track of something. It could be anything. So that's because I recently realized some people don't truly understand what an account is. If you look at any account, it's keeping track of something, right? It's just keeping track of anything, many different things. Here's a list of all of our most of our accounts that we have um, studied in the year. Some accounts are not here, like accumulated depreciation. Some equipment's here. Uh, Cumulative depreciation expenses not here, but most of the accounts are here. Okay, so account cash keeps track of how much cash the business has. Accounts receivable keeps track of how much business is owed by customers. Merchandise inventory keeps track of how much merchandise the business has. Supplies keeps track of how much supplies the business has. You could make that sentence for anything. Now, if you something like this, bank loan keeps track of how much loan the bank currently has. Uh, Owner's capital. This account keeps track of how much of the assets belong to the owner. Like, um, what's the total value of the business that belongs to the owner and not to someone else? Um, it keeps track of all those things. Store sales keeps track of the sales in that period. Expenses keeps track of an expense, any kind of expense, um, in that period. So it really understand there's no, it's not like a jar that money is sitting inside. It's not that. It's more like a piece of paper and you're keeping track of things, and you have a different piece of paper for different things that you want to keep track of, right? And that's what an account is. What it's keeping track of, how do you find out? Look at the name of the account. That's it, right? Look at the name of the account, and then we've studied throughout the year what different accounts keep, uh, different things keep track of. Now, based on that, we've studied 6 classifications. We've studied about assets, liabilities, owner's equity, these three being the main one, right? So, assets, and we know our equation that assets equal liabilities plus owner's equity. This is the main thing that we know, right? And we know that has a every account has a left side and a right side. The T account. So I have my debit side and the credit side for every account. We said that our favorite city was DC. That way, remember D's on the left, C's on the right, right? And then we said all the assets except contra stuff, contra accounts are always the opposite. So leaving contra accounts out of this for now, we know that all the assets always increase on the left side, right? Then we know that all the liabilities increase on the right side. You can remember this simply by remembering that assets are on the left side of the equal to sign, liabilities are on the right side of the equal to sign, so it increases on the right side. and owner's equity also on the right side. So it increases, all the owner's equity accounts will increase on the right side, right? So this way you can remember that. Now we get more classifications. So we learned about more classifications. We learned about classifications, different classifications under owner's equity. We learned about, first one that we learned about, well, actually we learned both of them together, was revenue, and then we learned about expenses. And revenue, because revenue increases owner's equity, it works with owner's equity. Owner's equity likes revenue. Revenue increases on the same side as owner's equity. Expenses decreases owner's equity. It goes against owner's equity. Owner's equity does not like expenses. Therefore, expenses increases on the opposite side of owner's equity. The reason I'm doing, you've seen me do this many times throughout the semester. The reason I do this all the time is because this way you can if you forget, you can quickly draw this for yourself. Start start with the balance sheet equation and quickly draw this for yourself, and you'll remember which account increases on which side based on just doing this. Then we made our sixth classification for cost of goods sold. The reason I'm putting in this under expense, because cost of goods sold is really just an expense. It's expense of buying the merchandise that you sell. But it's such a big, there's so many expenses, there's such a huge amount that goes with cost of goods sold for a merchandising business, that we as accountants have decided that we're going to have a separate classification for these accounts. And really, it's because it really, cost of goods sold is just an expense. Cost of goods sold increases on the debit side. Now we have all the classifications, which side these guys increase on and decrease on, right? So you can quickly draw this for yourself just at the start of the exam. So you can see this, and every time you come to a problem uh, and you don't know whether to debit or credit, you can quickly look at this chart that you draw for yourself. It'll take you a minute. At the very start of the exam, you can take a scratch piece of paper and just draw this for yourself. All right? Now, what are all the contra asset accounts that you've learned of? Only contra asset accounts that you've learned of in first year, and for the first years know about, is accumulated depreciation dash something, right? I'm just going to use another pen here and say something, right? This is a contra account, which will have it'll have the opposite side. It'll increase on the opposite side of the regular assets. So this is your contra. Okay. You don't know about any contra liability accounts. In owner's equity, really, when say we've learned about the drawings account. If you think about it, the drawings account is really a contra owner's equity account because it decreases owner's equity, and that's why it increases on the opposite side. When an owner withdraws money from the business, there's less assets left inside the business that belong to the owner. So drawings decreases owner's equity and therefore has an opposite balance. So you've learned of that contra account. What other contra accounts have we learned of? In revenue, we've learned of sales returns and allowances. That'll have an opposite balance to revenue. So it'll have it'll increase on the debit side because it decreases sales when people return stuff. Same thing with sales discount is a contra account, contra revenue account. It'll increase on the debit side. In cost of goods sold, in expenses, you haven't learned any contra accounts, but in cost of goods sold, you have learned contra accounts, purchase discounts, purchases discounts, and purchases returns and allowances. Right? So this really quick way to remind yourself what's going on. I've got my equation, and then from that equation, everything flows through and makes sense. Right? For my second years, under assets, you also have the allowance for doubtful accounts, which is a contra asset account that you've learned about. All right. But the main thing is to remember that each account is keeping track of something. That's all an account is keeping track. It's keeping track of things. I hope this helps. Again, take my advice. You can quickly draw this for yourself on a scratch piece of paper at the beginning of the exam to help you out for the rest of the exam.